Hello everyone, welcome to Inconvenient Truths. I'm your host, Jennifer Zeng. Today I want to argue this point, why the U.S China trade war is a decisive battle between the U.S and China that broke out early due to both sides' misjudgments on each other. And in this battle, the Chinese economy may risk a sudden fracture as early as this year. First, let's talk about the U.S. misjudgment of China. This misjudgment is that the Trump administration thought China was very strong. On the surface, China launches more new warships every year than the total number of warships in all European countries. The People's Liberation Army updates its equipment every year. Breakthroughs and applications in new energy technology from solar power to electrical cars seem very active. At the same time, the CCP is giving money to African and Latin American countries, providing endless financial support to gain their support on the world stage. Based on this surface signs, the Chinese economy seems unbreakable. A typical example of this misjudgment is a post by Elon Musk 2 days ago sharing an analysis by Grok. Grok said in 2025, China's GDP in purchasing power parity PPP terms is estimated at 35.29 trillion US dollars, making it 1.23 times larger than the US and 1.6 times larger than the EU. Musk commented, "This comes as a surprise to most people." This shows he agrees with Grok's analysis and thinks many people don't realize how big and impressive China's economy is. Of course, his post caused a lot of debates and rebuttals. I shared American investor Carl Bass' rebuttal and ended my own comments saying I was surprised that Elon Musk has not seen through the CCP's data manipulation games yet. What Grok can get is mostly fake numbers about the Chinese economy released by the CCP or other experts who use the CCP numbers to do their studies. This is a bit off topic, but I just want to say many people in the US overestimate China's economic strength. I'll explain later how bad China's economy really is. The CCP's misjudgment of the U.S. is that they underestimated the Trump administration's determination to change the status quo and misread the overall situation too. After Trump announced on April 3rd that he would impose reciprocal tariffs on almost all countries, the CCP thought that if it took a stand and called for action, other countries unhappy with the U.S. tariffs would follow, making the CCP the leader of a global alliance against the U.S. But the CCP didn't expect that a few days later, Trump would pause tariffs on other countries, targeting only China with high tariffs. This put the CCP in a very awkward position. Having taken a tough stance, it was hard to back down, and the CCP was forced to match the US step by step. In a way, a decisive battle between the US and the CCP was bound to happen sooner or later. Their misjudgments of each other just made it happen earlier. I think an early battle is good for the US, but could be fatal for the CCP. Why might the Chinese economy experience a sudden fracture in the U.S. China trade war? Let's look at some data. First, the monthly issuance of national and local government bonds, not including urban investment bonds or other hidden government debts. This chart shows that since 2018, the issuance of national and local bonds has been rising. In other words, issuing bonds has become the most important way for both central and local governments to keep operating. In the first quarter of this year, the average monthly government debt insurance reached over 2 trillion RMB, or about 288 trillion US dollars, 13.8% higher than last year's monthly average. This 13.8% is the largest increase among all Chinese economic data. It means national and local government each needs to issue about 1 trillion RMB in bonds monthly to barely keep finances running. Compared to 2018, this scale has grown by 227%. Another factor is that in the first quarter, over 70 local bonds worth more than 400 billion RMB had insurance interest rates much higher than the market benchmark, usually by 0.2 to 0.5%. Local governments also had to pay higher insurance and management fee. Overall, they had to pay 1% more interest to borrow money. Normally, the first quarter is when society has the most available funds, as financial institutions have new funding quotas. Yet, so many local bonds had to be issued at 1% above market rates just to borrow money. This shows local governments are so desperate for funds they can't care about costs. Now, let's look at the government's fiscal revenue, which is official data. Compared to GDP numbers, which are often inflated, fiscal revenue data is more reliable because faking high revenue without the money to show for it would cause trouble. So China's fiscal revenue includes public budget revenue and government fund revenue. Public budget revenue equals tax revenue plus non-tax revenue. Government fund revenue mainly comes from land sales, which accounted for over 90% before 2021 and about 80% now, with some from lottery sales. Look at this table. You don't need to study the numbers closely. Just check the growth rate in the third column. Until 2021, fiscal revenue kept growing. In 2022, it dropped sharply by 6.3% due to strict COVID lockdowns. In 2023, after ending zero COVID policy, revenue rebounded slightly by 2.1%. But in 2024, the economic downturn could no longer be hidden. Fiscal revenue fell by 2%, and in the first quarter of this year, the decline grew to 2.6%. Now, let's look at fiscal expenditure data. Note that expenditure Data only decreased in 2021 when the CCP government called for tight days, cutting government spending, reducing civil servant benefits, and scaling back infrastructure. But this was only a 1% cut. Even this small cut faced strong resistance from officials. So, starting in 2022, spending rose again yearly, reaching a 5.6% increase in the first quarter of this year. Now, let's look at fiscal deficit data. In 2024, China's total fiscal deficit was about 0.12 trillion US dollars. By 2024, it reached 1.46 trillion US dollars, rising over 1,000% in 10 years. The deficit to revenue ratio jumped from 4.5% to 37%. These numbers are just shocking. In the first quarter of this year, the fiscal deficit was 0.32 trillion US dollars, a 41% surge from last year's 0.23 trillion US dollars. Note that fiscal expenditure pressure is usually highest in the fourth quarter when project settlements and procurement costs are paid. The first quarter has less pressure, so the deficit ratio is usually low. For example, in 2024, the first quarter's deficit ratio was 23%, far below the full year's 37%. So this year's deficit ratio based on current trends could reach a shocking 45%, with a total fiscal deficit exceeding 14 trillion RMB or 1.37 trillion US or 1.93 trillion US dollars. This is based on the relatively better economic situation in the first quarter. Starting in April, the U.S. China trade war fully erupted, and China's fiscal revenue will likely worsen rapidly. The annual fiscal deficit could hit 17 trillion RMB or 2.34 trillion US dollars. A Chinese economist said that if the fiscal deficit reaches this level, the likelihood of a sudden fracture in the Chinese economy is 100%. The entire fiscal and monetary system could crash and could not be sustained. From the current data trends, this possibility is growing. So what is the actual state of China's economy? First, let's look at a video by a Chinese vlogger who visited a mall in Shenzhen, one of China's most developed areas. This mall is as big as 1 million square meters or 247 acres.
常热闹的人山人海，现如今你们看到的这些招牌都是10年前就已经挂在这里的了。
Sorry.
商家都已经倒闭跑路完了，整个
Sorry, let's play it again.
这里3、400万没了，这里大一点起码7、800万没了，这里还有这里整一个厂子几千万全部打水漂，现在空无一人，连过街的老鼠都没有一个。这里就是当年那些深圳有钱人挤破脑袋都要抢的发财路，现如今成为别人口中最大的笑话、最大的败笔、最大的痛啊！你看，一眼看过去，鬼影都没有一个。 1楼、2楼、3楼、4楼、5楼、6楼全部都废了，兄弟们。当年这里就是号称要打造整个华南地区最大的一个商业城，涵盖所有的一个实体商业。现如今你们看到的一个情况，就是深圳赤裸裸的一个惨状。你们知道这里有多大吗？超100万平方，相当于1000多亩地啊！几万名业主买了这里，现在都变成了绿油油的韭菜。10年前的这里啊，是非常热闹的，人山人海。现如今你们看到的这些招牌，都是10年前就已经挂在这里的了。现如今商家都已经倒闭跑路完了，整个厂子空无一人。你们知道这里是哪里吗？知道的评论区打出来。像这种商业综合体的铺位啊，一旦分割出去给个人业主之后，几乎是不可能再运营了起来的了，因为它没有这种独立生存的能力。你看看，像10年前很火的那种商圈、那种商业综合体，有几个还能再运营的？是不是都哑火了？像这种铺位啊，兄弟们不用看了，没得救了，全都废了。所以你们还想买铺的话呢，一定要擦亮你们的眼睛啊！像深圳80%的铺位都是坑来的。
Well, did you see this? The mall is totally empty. And one, I think, here, I think minute, 2 seconds in this video, he inserts footage of the same mall 10 years ago, packed with people. Now, look at this table. It shows the 2025 graduate employment situation at Yunnan University. I translated it into English. You can see that among the university's 29 colleges, the highest employment rate is 53%. The lowest is a pitiful 3.8%, and the average is only 21%. This means nearly 80% of these graduate students couldn't find jobs. What a terrifying unemployment rate. For ordinary Chinese family, a 20-year real estate bubble has drained their savings. The average Chinese family has a net debt of 200,000 RMB or 27,500 US dollars. They have no savings or spending power. The top 2% of red families control 82% of the net wealth, making wealth equality impossible to measure. Worse, China has no reliable social welfare system. All social resources are tilted toward 90 million public servants. Ordinary Chinese have little security for health care or pensions. In terms of industrial structure, China's economy heavily relies on exports. 40% of its final industrial products must be exported, with a heavy dependence on the U.S. market. 40% of exported goods must be sold directly or indirectly to the U.S., meaning 16% of industrial products depend on the U.S. market. Business with the U.S. also brings the highest profits, about 50% of gross profit. Without this, Chinese industrial firms cannot survive and would collapse. The key issue is that the CCP's preparation were for a great suppression model. Its greatest strength now is controlling everyone tightly, but it no longer has the ability to mobilize society. The CCP's original plan was to enter a great suppression model after an economic collapse to maintain long-term regime survival. But the early U.S. China battle came suddenly, and the CCP was unprepared and clueless about how to respond. So far, besides shouty slogans, it has no real countermeasures. Today, the CCP released a 12,000-word white paper on COVID-19 origin tracing, blaming the U.S. for the pandemic. I think this is a desperate move by the CCP, unable to handle the trade war challenge. It's using its usual muddy the waters tactic to shift focus and keep deceiving the Chinese public. But in the face of a real storm, it's helpless. If the economy collapses, waves of business bankruptcies, unemployment, and debt defaults will follow. Social order will worsen sharply, and national governance will collapse. At that point, even printing money won't save the economy, and this seems unavoidable. The only unknown is, after the sudden fracture, whether China can end the social unrest and rebuild order quickly. If this drags on too long, the cost for the Chinese people won't be solved by just eating grass for 3 years. Well, that's all for today. I'd like to take this opportunity to thank Mr. Moody and Mr. Lively for their generous donations. Please support me by liking and sharing this video, subscribing to my channel, following me on Ganjin Road or X, or visit my website at jenniferzengblog.com to sign up for a membership or make a donation. Thank you so much. See you next time.